I'm back again with another analysis. This time we're going to look at the the gold chart. First of all, I will start with an update to my previous analysis. Then we will check out the gold news, and then we start analyzing the XAUUSD chart, which is the gold chart, with technical analysis. And we are utilizing price action method to analyzing that. And as always, we start from weekly. And as soon as we get closer to the current price, we jump into the lower time frames, daily and hourly time frames. And based on them, I will come up with short, mid, and long term conclusions um, as my opinions. So let's quickly jump into the chart first. This is what we had as our analysis points. This one is the preceding analysis, which we actually found this former. This is a 4 hour view, by the way. We had these, we recognized the breakout to this ABC pattern as a corrective structure. And after this, we expecting short term as the reversal to retest the structure and then continuation as the midterm and long term. So that happened exactly, and we reach out to these previous analysis. This is the point, this one, and we were expecting as the midterm and short term just continuation this trend, and we are seeing that this is something that has just happened. And also we talked about this resistance level, and we can see how price recently just reacted to this level as well. That for as an update. Let's jump into the news. So this is saying that the gold on the run as market tremors return, and it's simply talking about the good news on this metal, which prices move up on Thursday, hitting a session high of 2,004 per troy ounce. And this rally was underpinned by falling dollar, as you know, the news for the Federal Reserve. And also bullion traders were encouraged to grab more of the shiny metal on the expectation of the US Central Bank as well. So positive news about that. Let's jump again back to the chart. I would like to clean up the chart. This is what I always do before starting analyzing and taking a look at the chart again. And as I said, you start from the weekly to have a good understanding of what happened in the history. We can see if I zoom out a little bit, we had some sort of rally, increasing rally uptrend during the several past years. So I can see that these last, as on the weekly chart, usually paying attention to the 2 or 3 previous waves is enough, and I can found this uptrend as an impulsive wave and the range market as we discussed in the previous analysis. Again, if you're interested to that previous analysis, the link is in the description. But I will cover the key points of that previous analysis in this one as well. And also we found this level as the bottom of this range market. And we count these as some kind of sideways structure after this rally, after this impulsive wave from down to top. So in the previous analysis, we count these as a flat, or also I talked about the possible expanded flat, which we had this ABC here. Let's just quickly talk about this. We had this ABC, and um, this is going to be an intermediate. Let's just change the color to my preferred one, and it is our major intermediate wave here as the ABC. And we talk, and after reaching these, we are now seeing an uptrend. But I want to look at this flat or this range market not as a flat this time, to come up to pay attention, to attract your attention to very important momentum in the price section, as it is so important for us. This is our method for analyzing a chart. So I would like to remove this time, and I would like to grab, if I just look at this impulsive, this downtrend here, which is up to, let's utilize this Fibonacci retracement tool, and we are seeing that it has been up to 15%, this whole rally, this corrective sideways corrective structure. So we have that information in mind. We know that the sideways structure also are less than 15 percentage. This is exactly sitting on 15 percentage. So yeah, there is nothing is breaking any rule or theory. Hey man, nothing is actually breaking our theory for this. But I would like to look at this time, because I guess this corrective structure here was our first corrective structure, and I can actually count this as our W, and it has been linked to the next corrective structure as y. So this is, if I actually use my pop-up here, this is Elias double combo wave. So it means that we had this corrective structure, and it has been linked to an X because we had two combo corrective structures, and now we have reached out to this bottom layer, so as our second corrective structure. Why I'm looking at this time, the reason is that I would like to pay attention to how long each of these waves took long to get completed. Let's just grab this tool. It is actually counting our uh, axis, which is time here. We are seeing that this, from the beginning, this first corrective structure, it is almost 30. I will grab the same tool, and now I would like to take a closer look to this X. And this X, it is almost 50. Now, our second corrective structure, uh, in our daily view, this is something like, okay, it has been ended here. I guess it is fair. And it is also about 30. However, in the previous, in the current momentum, as we talked about it as the update to our previous analysis, in this one, we are saying uh, that this has been almost reach out to the top, not completed, but almost reach out to this point, but very short in comparison to the previous X. So if it is going to be our second X, because it can be continued, this range market as the return might be continued as a triple combo. So if I get rid of these double combo, I can count the same waves with another two, WX, then Y, then another X, or sometimes we call it double X or XX. Then we can have the Z as a third wave, as our third corrective structure. So the difference is that if that is going to be our second X in comparison to the previous one, yet both corrective structure almost 30, they had the same length from the time perspective, but these X's are not going to be compatible. This is almost a half of this wave and reaching out to almost the safe point. And this is a really important key point that I want to uh, actually keep that in mind, because I will come back to that when I'm going to share you with my conclusions about the chart. So let's just for now bring this combo corrective structure that we know. Yeah, so far we had this combo, and we will talk about this last impulsive, and we will try to understand what type of wave it is going to be. So I think it is good enough for the weekly. Let's jump into the daily and take a closer look to this. Again, in the previous actually analysis, we talked about how we count these waves. This is going to be an ABC, also an ABC as the link, and also another ABC down to bottom, which the C is the ending diagonal, an extended C, uh, as I can actually grab the tool and show you what I mean here. This ABC, the C is extended. This is another way that I'm looking at this wave this time. And now after that, we have this very powerful, sharp, impulsive. We know that the bad news on US dollar, and that's one of the reasons recently that this huge momentum, which was expected, of course, as we discussed in the previous analysis, has been happening. So coming back to where we were talking about our update, we know that this corrective structure, which was our ABC, it actually created a triple bottom here, also a little bit of expanded, or because this is the zone that's very important support zone, some sort of three times fake outs, or I don't know, but uh, we know that it has been created another daily uh, support zone just a little bit underneath it, but it created triple bottom, as we can see. So we had the breakout, and after that we are seeing this rally here from the daily perspective. Let's jump into the hourly again. Now it's the time to talk about in more depths about this final wave. We know that in this, just coming back to the daily again, just to complete, we know that it is going to be an ABC. We don't know if it is going to be an X. If it is going to be our next X, next link to this triple combo corrective structure. So this is going to be an ABC pattern, which we are seeing obviously, and probably it might be continued its momentum. But uh, that's not what I want to share with you. I will, that conclusion is coming up. But anyhow, um, we know that we had another impulsive wave after we reach out to this level. Now, I guess now is the time to jump into the hourly chart. Just expand it a little bit as we discussed. This was our ABC structure. And here we had this um, trend line that we also discussed, that we had this breakout after this hourly corrective structure, and we had this momentum. Also, we can see the previous higher high just broken, and also price reacted to these two times. If I just zoom in a little bit, it will be nicer if I uh, go to the just a lower hourly time frame, but there will be very details. I don't want to add a lot of noise. So with that here, we can see that how price has been reacted. However, just taking a closer look to this rally, I can see that we have almost, of course, it is impulsive. The corrective structure just has been completed, and it has been also created already a higher high after its third wave. This is not an intermediate. This is a minor wave, and I would like to choose a little bit lighter color for that. So here it is going to be almost done. This five, uh, this fifth wave. I can see that we already just have had a breakout to this resistance zone, which is was our daily resistance zone. I can add these my usual arrows on the top of this zone. And yeah, I can see that it has been created almost fifth wave. I can bring up MACD. I usually don't use indicators, but the only oscillator that I use just to confirming the reversals is this one, which is my preferred one. And here I'm seeing uh, almost a very strong divergence. And this is happening, as you probably know, when price creating higher highs, but in the same time, we can see on the oscillator, it is creating a lower high instead of higher high. And by the way, this is by default on the closed. Um, it's based on the closed time of the candle. So this shadow, it has not been counted as this has been get formed, and this is also has it has been how it's configured for mine as well. So we can see that the closed value of these prices are higher of these, so we have higher highs. Just to clarify, if you're wondering why I'm ignoring that shadow on the top of the third wave. So we have this divergence. We almost actually passed this resistance zone, but we are not seeing that much of a power. Also, we are seeing that this fifth wave also now for counting the waves, this shadow of course will be counted, but we have a truncated, it seems so far. It might be continued to the top, but we might see a possible truncated uh, fifth wave, which it is going to be called as truncation. And for that, just coming to my first conclusion, the short term, since we are on the hourly perspective, I'm going to uh, expecting a reversal from these. As we discussed, we have reached this level. The five-wave impulsive um, has been finished, and also I'm seeing a very strong divergence. However, this is not forced to be truncated. I'm just told that it might be a possible truncation, but it might just move up a little bit to create a more strong divergence, and then after that short, very short momentum, we might see anyhow breakout in any case. This is my expectation. And this is, of course, also I'm seeing this point as an hourly resistance zone, which also price has been reached. And as the another point adding to that, that why I'm thinking that it might be done, uh, you can see that, oh, not the correct tool. You can see if I utilizing Fibonacci extension tool, it's the same tool here on TradingView, the platform that I'm using. We can see that the third wave has been passed also the regular 161 percentage, and this extended third wave, probably that's the reason that we might have a possible truncation on the fifth wave. So anyhow, very short, we might see a continuation, but I'm expecting a reversal just down to a level somewhere, maybe to the top of this point or top of the first wave here. But as a short conclusion on the hourly, I'm expecting a reversal. Let's jump into the daily and talk about the midterm conclusion. Let's just reset the view. Really wants to remove stuff to give myself a little bit of room to understand what is happening here. Let me just get rid of these arrows here. Okay. And also I can remove that one. So as the midterm, if I shrink the chart a little bit, we had in our previous analysis that we were expecting to be that wave continuation, if it is going to be our X or a new impulsive wave. So we might see a continuation. However, now this continuation should be after a reversal to point to this one just to retest this breakout of this daily resistance or a little bit down here. But as the midterm, as we are talking about, so far it was our short term as we discussed on hourly chart. But now from this point, I'm actually can come up with two scenarios. The first is what we just discussed in our previous analysis, the continuation to the top of the history. This is the top of the history that price just reached out two times, I guess, very long ago. And here is one of the scenarios. But if we actually see a very powerful improvements on US dollar, which I don't know if it really can happen. So the gold will be actually uh, continued its reversal, this corrective structure, maybe to a more lower level, according to Fibonacci extension rules, maybe to 61 percentage or something like that. So this is also possible, the continuation to downside, because this is going to be this short-term conclusion. It's going to be a very short corrective structure to this level, to this impulsive, powerful impulsive that we had in the past 2 weeks. So there is a possibility that we also see a longer corrective structure here. Anyhow, to finalize this analysis, I would like to jump into our initial point. Talking about long terms, again, it is not really wise, but because I start with weekly, I also want to um, talk about as the long terms possible scenarios as well. So we know that we had two momentums, two possible scenarios on our midterm, but anyhow, for the long term, um, it is really dependent. And now I want to come back to what we discussed about the length of this range here. As we can see, this return to the top has no any relevant from the time perspective to the previous X. It is so sharp, so it might be counted as the um, and beginning of the impulsive wave. So we had that long impulsive wave several years ago, or few years ago, and now a long range market. Now it can be as the shapes it's and as the price actions telling to me is that it is so sharp, it might be the start of an impulsive wave, and this might be continued to the top. But it is so tough because this is a very powerful resistance, historical, the, the top of the chart in whole history. And if that happens, uh, probably we are going to have some problems in the world because as this metal just increasing, it is showing that economy might have a problem, not something complete rule, but it is not going to probably not a good news. And it might not be sharp, as I said. Probably we are going to see a reversal prior to these breakout, and also after breakout we need to see some retest. I'm not saying that this sharp continuation also can continue and pass this resistance. So no, in that case, if that is going to be the case, that will be a little bit more slow after this third wave here. Then the fifth wave is much slower and probably a return to retest the structure as the corrective momentum to this big impulsive wave. But anyhow, that's one of the scenarios. Another scenario, as we already touched, that this combo might be another X, even if was so fast, which I mentioned because of the first scenario that we just talked about. But anyhow, it still can be. It is not going to um, invalid the idea of having our third um, combo corrective structure to continue the W, X, Y, X, and Z. So as the long term, also it is more possible, I guess, to see a more kind of reversal back to the top of bottom of this range market or channel or flat or anything you want to call it. Anyhow, this was my conclusions and analysis for today. I hope you guys, I'm seeing that we have some guys in the chat. I'm hoping you enjoy it. If you are interested, you can see my previous analysis. The one that I just talked about is in the description, but also you can find other analysis in my YouTube channel. The link is in my channel in Twitch as well. If you have any question, you can actually jump into my Discord server. Just feel free to ask any question. I would be grateful to answer. And also, if you're watching me on YouTube as a recorded video, I would be grateful to put some comments to give me some feedbacks what you're talking about this content. Anyhow, until next analysis, thank you for watching me and have a nice day.